we are due for a major correction.
Well, look,
You do see another rate cut this month.
absolutely. Over $7 trillion still in money market funds. Additional potential fuel.
AI is the driving force.
Unprecedented level of CapEx spending.
Who got the power?
We have so many headwinds here, like the government shutdown,
Right.
like the economic uncertainty. So why? Why is that?
The whole environment for stocks and for investors is really in a sweet spot right now. Despite the fact that there are some alleged headwinds or pieces of uncertainty, government shutdowns typically don't have much of an effect at all on the market unless they last for more than a month. We're going to start getting earnings reports from banks. Pay very close attention to the guidance that we get.
So basically, the government shutdown or the economic data doesn't really drag the market. But what is momentum here?
So, look, earnings still continue to be good. The Fed has entered an interest rate cutting cycle. At their last meeting, almost a near certainty that they're going to cut in the meeting the last couple days of October. It's likely they will cut in December, although that's still a ways off. That's very positive for stocks, of course.
You do see another rate cut this month.
Absolutely. Yes.
Why is that? We don't even have the data,
I know that, but it's clear that more risk to job market slipping than there is to inflation going significantly higher, and the Fed always wants to balance those two out.
Now the big question is the rally sustainable or we are due for a major correction?
Well, look, I certainly wouldn't be surprised to see a 3 to 5% correction at any point in time, but I seriously doubt that we're going to have a major correction like what we had back in April. We went down close to 20%, maybe a little bit more than that on some metrics, what I called a tariff tantrum. The third quarter was strong. We're coming into the end of the year. Seasonally, a strong period for stocks. Look, we've had a very, very strong run.
Yeah.
To get a 2 to 3%, maybe even a 5% pullback would almost be healthy. But it's going to be a buying opportunity if we get that. Because there's also a tremendous amount of money still in money market funds. Over $7 trillion. If the market continues to rally, they will say, look, I'm not getting that much money in this money market fund. And that's just some additional potential fuel for the rally.
Many say that AI is the driving force behind the rally. From a Wall Street trader's perspective, is that real or is just a hype?
No, that absolutely makes sense because that is the main catalyst for the significant and almost unprecedented level of CapEx spending that we're seeing from big companies in the technology sector to make sure that they can take advantage of the positives that will come from spending on AI infrastructure going forward. What's going on with the whole AI revolution is almost like a modern day industrial revolution, like we had in the mid-1800s with the railroad companies and the steel industry, and in the early 1900s with the automobile industry. Everyone is looking to power up their businesses with AI capabilities for the next 20 to 30 years.
Basically, AI is a new form of infrastructure.
Yes.
All right, got it.